everyone. It is my pleasure to welcome you all for today's session on digital financial infrastructure and future of financial institutions. I, CA Ashish Subedar, Chairperson, CP Committee, welcome you all for this great evening. May I request all to stand for ICI motto song?
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामंशो पुरुषो निर्विमाणः तदेव शुक्लं तद्ब्रह्मा तस्मिन् लोकः शतः सर्वे तदूनात्यपि कश्चन
Before the pandemic, the financial service industry was progressing through its digital transformation journey. However, when quarantine orders were placed, there was an enormous shift in demand for digital services. This caused a ripple effect where organizations were forced to accelerate their digital and digitally enabled products by several years instead of only few months as planned. This CPE session has been organized to shed light on importance of digital financial infrastructure and how it can be leveraged to create a more efficient and inclusive financial system. Our distinguished speaker, Mr. Praloy Majumder, will provide insights on the latest trends and innovation in the digital finance space and future of financial institution. May I request our Secretary Gaurav Kapoor for his speech.
Good evening, everyone. First of all, I would just like to inform, probably most of you already know that earlier this month on 12th of February, ICI has elected new torchbearers for FY 23-24 and CA Aniket Sunil Talati has been elected as the president and CA Ranjit Kumar Agarwal as the vice president of ICI. As I mentioned in the last CP, we are still going ahead with that privilege card and we do expect it to be test run by end of this week and hope to launch it in mid of March. I'll just tell more details as I go through my other points for today. The membership renewal for FY 23-24 is also available now. You can start renewing your membership. And it's also important because only the members who would have renewed their membership would be eligible for this privilege card. It will be an electronic card linked to the mobile app. So that's how we are working on it. We have a few exciting CP events lined up. Next week, 8th of March, marks the International Women Day. And we will be celebrating it with the CP event on EQ along with distinguished guests. I had mentioned in the last CP that we will be planning a family day towards end of Feb or beginning of March, which unfortunately could not mature because of the weather getting hot. But since our President CA Aniket Sunil Talati is he will definitely be in Oman on 14th and 15th of March. So on 14th evening, we'll try to have a session along with him so that we can have an interaction directly with the president. So please do save your diaries, and we will communicate more details on that. Apart from that, CP that we will have on that day will also send formal invitation to the dean of CBFS, and as part of, and I know Dr. Rajesh had requested an email to the chairman, and since chairman is not here, I'm just giving an informal response to you on that. As part of the best chapter award that we won, we always give and or hand it over to the dean of CBFS as our sponsors and place it in the outside the dean's office. Here, if you go the next and go to the first floor, you can see all the previous awards being put up on the show there. So as part of this year's handover, we are planning that when the president sir is here, he himself hand over the award to the dean. So we'll communicate formally also, sir, on that. So those are the things we have lined up for 14th. Hopefully things will go as per plan. No more details from my side, and I hand over to the committee to take up the CPE for today. Enjoy the evening. Thank you.
Thank you, CA Gaurav. May I request CA Sangeeta to introduce Speaker of the Day, Mr. Praloy Majumder?
Thank you, Ashish. Good evening, everyone. Since we are all professionals here, and I think we are all from finance background, and so the topic financial or digital finance is nothing new for us, right? But still, digital finance infrastructure, what does it refer to? It refers to the technological systems or the networks that enable the financial transactions to be conducted digitally. So that includes everything right from our mobile apps to the payment gateways through which the payments can be made digitally, as well as the blockchain-based systems. Digital financial infrastructure also offers lots of opportunities for the financial institutions to streamline their operations, which we have already seen, which was of great benefit during the COVID or pandemic time. And a lot of that has already been told by Ashish in his introduction. And that in the event, it also helps in reducing the cost. I think that is the most benefit that we all are looking at from the finance perspective. So for this topic, digital financial infrastructure, we have today among us renowned expert, Mr. Praloy Majumder, who will take us through this event. Praloy has over 3 decades of work experience in BFSI sector. He has previously worked with Syndicate Bank and ICICI Bank before becoming a full-time passionate trainer in the space. During his stint at ICICI Bank, he was a proud member of bank's first core team involved in raising funds through ADR. He was also one of the selected few to undergo an advanced training program on derivative securities conducted by notable and famed Professor John Hull. He has been conducting trainings for almost all leading banks and financial institutions of the country for the last decade and is a very well acknowledged trainer in the BFSI domain, having trained over 18,000 bankers across all ranks. I think this requires a big round of applause for you, sir. Praloy conducts program from the futuristic angle. Due to his futuristic-looking approach, clients get enormous benefits. Professor Majumder has been able to predict the surge of NPA of Indian banking sector way back in financial year 2011-12 and informed the participants to change the credit assessment methodology. Besides, he has also been imparting banking and risk management courses at IIM Calcutta for the last 18 years. and few other top management colleges such as IIMs and Great Lakes Institute of Management. He has also conducted courses on business finance for our beloved institute, CA. He himself is an alumnus of the prestigious Indian Institute of Management, Calcutta. Recently, Praloy has been empaneled by RBI College of Supervision for imparting sessions on credit risk and liquidity risk. With these few words, I extend our warm welcome to you, sir.
May I request Mr. Abhishek Toshniwal, his colleague also, to come. We'll welcome you with a bouquet.
Yeah, very good evening to you all. Welcome to these sessions of digital financial infrastructure and future of financial institutions. What I will be discussing about is that how this digital financial infrastructure is changing the entire game altogether, and how the financial institutions are going to adapt to this, or what are the possible scenarios are there. What I will do, I will give my views very candidly. You can ask any questions during the sessions. You can raise hands and you can take the mic because it is getting recorded. Any kind of questions are welcome, because I can actually, and I will give my views, and in these kind of practical sessions, there is nothing called the analytical solutions are there, it's a numerical solutions. I will give my views and I will tell why I am giving my views. So from that sessions, we will be able to get knowledge that how the financial infrastructure is evolving and how the entire things are changing across the world. Because my strong belief is that, as already you are seeing that UPI is creating major ripples across the globe. We expect another 3.5 years, a complete new structure about the lending is going to swarm the entire world. Because in India, if you look at it, 2016 UPI came, it took around 5 years to stabilize. Now the UPI is going to across the world. Now in India, in just 1 year before, has launched something remarkable which is nowhere there in the world called account aggregator. I don't know how many of you are aware of it. It's an account aggregator, is an open banking system, nowhere in the world is there. And believe me, this is going to change the lending, it is happening across the world in another 3 years' time. So I will take you through that how the things are shaping it up, and we'll see that how the financial institutions will be adapting to this, and from that we can see that what are the best possible ways the people can actually collaborate. Now, first of all, if you look at it, is that now there is an enormous amount of growth is happening on the fintech sides. Now, you see, today people are solving problems where people never thought in the past it is solvable. Give you a couple of examples. Reusable rockets. People never thought that reusable rockets is possible, but this has happened. Previously, vaccines used to take 2 decades. Now here, COVID vaccines have come up how many months? It's 9 months to 12 months. Can you tell me what is the major reasons about it? How the COVID vaccines have come in 9 to 12 months? No, it's fine. Always necessity was there in the past also. Sorry? One of the major reasons is the data sharing. What has happened when the COVID came up in December 2019, from January 2020, people started uploading the genome sequencing. The moment genome sequencing came, a lot of data came in. The moment a lot of data came in, from the data, the power of data has actually put something, the vaccine which is never thinkable is to come. Believe me, right now some trial is going on where after 5 years, people will not die in cancer. These are some of the problems which has been getting solved in the present day. Because one of the major reasons we have to see as more and more data coming in, a lot of capacity of processing is happening. And since a lot of capacity of processing is happening, this is solving terrific amount of problem which people never thought in the past. So on that perspective, financial thing will also change. This is absolutely clear. With more and more data processing, financial institutions, financial services will undergo complete change. So here we will see that how the changes are happening, and one of the drivers which is changing is the fintechs. So, one of the C is that why fintech started growing. There are two reasons any industry grows. One is demand side, one is the supply side. So, on the demand side, why financial fintech has grown? Because traditional people could not solve the problems. Reason being is that financial inclusions, banking in existence for quite long period of time, but financial inclusion could not happen in the desired pace. So, what has happened here is that then the fintech understood the demand and they started opening. If you look at it, one of the most successful stories of financial inclusion is M-Pesa in Kenya. People are not having the bank accounts, but they have the mobile phones. Through mobile phones, they started transferring the funds from one person to another person. So, on one demand side, there is a terrific amount of demand is there. Second, a survey said that in India, 91%, in China, more than 75% people always prefer a technology company to do the financial services. A survey has been conducted and they say that they will prefer or trust technological companies to do the financial services. So, what is happening? There was a gap between the traditional players, what they are providing, and at the same time, what is being demanded from the market. So, on the demand side, there is always a there. Next comes to the supply side. So, if you look at is that on the demand side, one is the unmet demand, another is the customer preferences. Now, if you see financial inclusions, banks and financial inclusions, if you look at, these are some of the statistics, this is the global problems. So, in the global problems, traditional players, if you look at it, there was a problem. So, these people try to solve it. So, that is on the demand side, it started. Now, customer preferences, these are some of the statistics if you look at it, that 91% Indian and 86% Chinese and 60% of the US respondent, they are saying that they will be preferring the technology companies. All of us knows, if you look at it, when we want to transfer funds in India, UPI, which we use? GPay. We use PhonePe. I have a bank account which is an ICICI Bank apps, but I never do that. Same thing with ICICI Bank apps, but I don't do it. I do it to the GPay. This corroborates to the fact what is the people are preferring. So, one of the very important point, these consumer preferences are changing. Now, we will also tell that why it is changing and how the traditional players are reacting to that we will also discuss. Now, on the supply side, if you look at, access to data is becoming to the technology companies. When they have got the large amount of data, they can extract terrific amount of meaning out of it. At the concluding part of the sessions, we will take you the actual things, what is going to happen in the credit underwriting front, which is actual data, how the data can immensely empower the people of the credit underwriting part. That is the one applications I will tell you in detail with hard numbers. Second part is that these technology companies have been able to develop more data computational capabilities. You see, today, if you look at it, today another big revolution started happening from November. Can anyone tell me? From November, a big revolution have started happening, which can actually put lot of problems for Google. Yes. In ChatGPT, in 1 month, they have mobilized 100 million accounts. Never in the history it has happened. So, ChatGPT has a potential to completely disrupt the Google part. So, what is very important is that these big companies, big data companies, what is happening is that they are got immense amount of data computational power. With this data computational power, they are becoming a formidable force to provide the financial services. So, this is very, very important to understand, and today if you look at it, the Amazon, major money is being generated by Amazon Web Services. Similarly, if you look at it in Microsoft, in that case, Microsoft Web Services, correct? In the case of the Microsoft Web platforms are generating maximum amount of revenue. So, what is happening with the help of the data processing capability, they are taking extremely high amount of meaning out of the data. And when they meet it with the customers, then there is a terrific amount of power is there. Now, I will bring one concept called, you see, all of us knows about the concept of segmentation, is it not? Now, today segmentation is history. We talk about not segmentation, we talk about segment of one, because it is highly possible to customize individual customer as a segment and give the financial product to that individual. So, latest concept what we called is called segment of one. Means each individual can be segmented in an automated way and provide a solutions which is customizing the need of the customers. This was unthinkable even for 4 or 5 years back because of the lack of computational power, lack of the data availability. So, it is a very important point, we have to keep it in mind. Next, what we talk about is that higher charges by existing players. Look at it when you try to remit fund from Oman to India or India to Oman, terrific amount of charges is being charged by the banks, correct? Now, since there is a huge amount of charges is being there, what is happening, there is a player, there is a people saying that, okay, these charges are there, let us try to reduce it. You see, last week, what has happened? India and Singapore, UPIs got connected. The moment UPI got connected, what is happening? Now, the income Indian banks and Singapore banks was earning through remittances will substantially go down. People are expecting the price will come down by 80%. So, what is happening is that because of the charges was high, people thought that there is an area where we can actually build up a solutions and these solutions can be sold to the market. And from the financial regulators perspective, it is a win-win situation because if the charges goes down, more inclusion will happen. You see in UPI, how many charges are there in India? Zero. Zero charges, and one of the reasons why the digital acceptance is going up because of the zero charges. So, in this case, very important, since there is an opportunity, so on the supply side also people started coming in. During the sessions, please feel free to interact, ask any questions which comes to your mind. Now, if you see, in the case of the fintech, there are 3 things what we talk about. One is fintech, big tech and reg tech. So, in the case of the fintech sides, fintech can be small, medium or big. But what will happen is that this is basically trying to solve financial problems. This should be working in selected areas, and if you look at it, it would be service centric. Now, a fintech can be very small. They can work in a very niche areas. Example, if you look at it, people working on credit underwriting solutions, they need not be very big. On the other side, they can be very big, like for example, Google Pay. They are actually working on the payment sides, end-to-end solutions. There are people who are actually creating end-to-end complete processes like Paytm, they can be very big. So, what you look at, the fintech can be small, big as well as the medium thing. Now, one of the important concept is called DNA. What is the full form of DNA? It is called data network effect. The entire story of growth of the digital companies is the DNA. You see any company, Facebook, Apple, Google, they work through the DNA effect. So, what they start, they first acquire clients, then they start getting the meaning out of the data, then again sell additional products. You see the impact of DNA effect can be found out in the last year with Facebook and Apple. What has happened? The Apple users were previously, there is a Facebook and Apple, there is a collaborations. In that collaboration, what used to happen? That at that point of time, whoever Apple users are there, they are getting lead to the Facebook. I think in 2020-21, this has been stopped. The moment that has been stopped, because Apple now, what is happening? They are not giving the free accesses, they are giving some notices, some blockage is coming. Facebook revenue has gone down. So, one of the very important point is that because of the DNA effect, what has happened? This entire technology company has grown. Now, these technology companies have not ventured into financial services. Now, with the help of the DNA effect, they can give much more powerful solutions to the customers of the financial services. You are getting my point? So, one of the very important point is that DNA effect, they have used these kind of technology companies to provide their own solutions. They have not ventured into the financial solutions. With the DNA effect, with the data processing capability, they can extract terrific amount of meaning and they can provide substantial powerful solutions to these particular segments. So, what we talk about is that self-reinforcing loop, more data means more business, more knowledge and customers' behavior. Big tech firm head starts if venture into financial services. So, it is very, very important is that now on the other side what is happening? The big tech companies' margin are coming down. Since the margin is coming down, they would be entering into new areas. You see Microsoft. Then if you see Microsoft is getting into games, mobile games. Why they are getting into mobile games? Because the traditional way the margin is going down. Since the margin is going down, they are venturing into new areas. If they are venturing into new areas, financial services is a very lucrative area. So, there is a possibility that the big tech companies which would be using this DNA effect and they can get into the financial services. So, what is happening across the globe, regulators are keeping a watch how these big tech companies are entering into the financial services. So, this is a new trend which is happening, and in everywhere across the globe central banks are they thinking what kind of the regulations we have to modify, so that the big tech companies does not, how we can actually prevent this risk. So, this is one of the important points we have to keep it in mind, that the big tech companies can get into the financial services. As I have told at the beginning of the sessions, I will generally in all my workshops what I do, I give complete predictions how this future will come. But there can be uncertainties, but here also I will tell my view about how the future will evolve. Now, in this case, if you look at in the case where the big tech companies can play an important roles, if you look at in advertisement, then selling, users preference for marketing of financial products, to serve as a supermarket for third-party financial services such as an insurance. Let us take an example. If you buy something on Amazon website, what you get today? You are getting this product or not? In Amazon websites, you try to buy, there is an zero cost finance. There is something called BNPL, buy now, pay later. Now, how it is happening? Amazon is processing the data. Based on the data, they are finding out the meaning, and then they are selling the solutions. So, already if you look at it, this has already come about this user information and user preferences for marketing of financial products. In future, the moment Amazon in India, it is widely practiced, Amazon ICICI co-branded card, Amazon Axis co-branded card, everywhere there is a co-branding thing is happening. So, once financial product is getting sold, they are getting commission. So, this is the other way income is coming. Is it clear? So, in future we will see more and more such collaborations can happen. Again, please feel free to ask any questions which comes to your mind. So, what we talk about here is that, so in the big tech platforms, competitive advantage comes from that, and this is the one area what we can talk about. Now, say for examples, if we look at, so when you talk about it, it talks about that fintech has got a very bright future. Now, what will happen to traditional institutions? Now, one of the very important epoch moment of fintech is October 2020. Why? Because October 2020 and financials was accessing the market for the largest IPO in the world. That is in October 2020, the moment they have filed prospectus, then their issue has been blocked. That was a transformational moment for fintech. Because why? At that point of time, people were thinking that fintech will have a straightforward win. Now, from that point of view, a lot of things have changed. Now, what has happened is that, now from that point of view, the fintech is actually not growing as fast as possible. On the other side, traditional lenders are also gaining ground. So, post 2020, what has happened? Now, one of the very important point as a professionals, I actually always tell my students that I am Calcutta and everywhere. Today, people will value you if you predict future. Because most of the routine work is being done by the machines. So, how the prediction of the future takes place, that the people gives a lot of values. So the moment it is happening in financials, immediately I started telling in Indian people, the same kind of law is going to come in India for the case of the digital lending. Now, what has happened? RBI came out in 2022, some digital lending circular. But people who did not realize it, today, in the next 6 months, around 2,500 fintech company would be closed down in India because the change in business model. So one of the very important is a dynamic environment. So every time things are changing. When the things are changing and when it is changing, we have to find out. So at that point of time in October 2020, there is a clear-cut business model is emerging across the globe. Is happening is that fintech and traditional lenders both will coexist. It's not that the fintech will take over about that. Fintech and traditional lender will coexist. When you take it coexist, there would be the 4 stages of coexistence. Now, why it is important? Understanding this, then we can place where is Oman situated right now. In India, we can say where India is situated, because I will tell you this is the 4 stages of coexistence between fintech and traditional lender will take place. Now, first stage, what will happen is that the stage 1 is that tech firms will be actually using the existing infrastructures, but not very strong of the banks to provide the services. When it happens? When the payment, first people will start the payment. When the payment is not matured, people will try to do what? People will try to use the existing infrastructure to improve the payment processes. This is the stage 1. Now, in India, stage 1 has already passed. This is very simple because payment system has already been developed. It started happening from 2010 onwards, and now this stage is already being passed. Now, in the case of the stage 2, what will happen? In the case of the stage 2, payments would routinely cut out the existing players. So, what will happen is that the traditional players would be moving out of the system, but last level settlement will happen. India stage 2 is now gaining the important point. Oman, my view is that stage 2 has not yet come. Here the stage 1 is working in Oman. Future stage 2 definitely it will come. So what is happening here is that, now give an example. When I try to do the transfer of the fund, I am not using traditional players apps. I am using GPay, I am using PhonePe. So what is happening here is that traditional players are cut out the system, and what is happening, I am using the last level of settlement is happening through the banks, which is the fiat currency. Stage 3 is the era of super apps. So what will happen? A super apps will come, and this through super apps, all the functions would be there. So that means if I want to buy some goods, if I want to take loan, if I want to buy financial services, I may not go to the banking area, I will go to something called super apps. India entering into the super apps. Why? Because the Tata Neu is a super apps. Reliance is coming up with the super apps. So what is very important is that third stage would be the super apps, where all the kind of services would be provided through that super apps. Now fourth one, what is the fourth stage? What we talk about here is that here both the lending, both the deposits and advances will happen to the fintechs. That means they will source deposits, they will lend the money. As of now, it is unlikely. As of now, it is unlikely, because one of the very important points, the trust issues have taken a huge beating in the last 2.5 years on the fintech sides. So if you look at the fintech and traditional part, prior to 2020, people are thinking is that no, it's a one-way traffic, it is not. Now more or less it is of a coexistence would be there. Why this knowledge is important? This knowledge is very important to understand where we are situated. Based on that, we can design, we can actually find out what can be the best possible solutions. Anyone is having any question, please feel free to ask. So these are the 4 stages of collaborations of the fintech can be there. Now when you talk about, any times when you talk about fintech, so how do you classify fintechs? Fintechs can be classified in 3 ways. one is called platform companies. Platform companies means where the entire part, correct, what is happening, platform companies means where entire transaction will happen to the platforms. Second category of fintech which works in CBDC. CBDC is the central bank digital currency. Oman will also come up with the central bank digital currency. Every central bank will come up with the CBDC, central bank digital currency. So those fintechs which will be working in CBDC. And third one is the DeFi, where a friend is there who is working on DeFi side blockchains, correct? So DeFi is a blockchain. So basically, in the distributed financial ledgers, there the blockchain would be there. So if you look at it, there are three categories of fintech companies that will be there. One is a platform, one is an CBDC, which is working on the central bank digital currency side, and another is the DeFi side. Today, most of the area where banks or financial institutions is going to influence or going to be affected is a platform economy. So how the platform economy is going to change? So our discussion in these sessions would be how the platform economy is going to change the financial structure. So whenever you find out any fintech basically are three categories: platform, the CBDC, and the DeFi. And believe me, every central bank will come up with the CBDC. Why? Because it is becoming a prestigious project. If a central bank does not bring in CBDC, then that central bank would be treated as a laggard. So every bank will come in another 2 to 3 years, every bank will come in the CBDC. Even the transaction does not happen, but definitely it will come. Because I was conducting one workshop for Bank Muscat in September and October. When I was talking about CBDC, some people said, no, it is not there. Just check, and you see there is a document. It is a CBDC circular would be there. Think about 3-4 years before. Nobody was ever heard of something called CBDC, because the things have changed so fast. So this is the another part which is going to happen in the week. A lot of companies would be working on this particular front. When you talk about the platform companies, now in the case of the platform companies, there are 4 categories of transition happens in platform. One is paytech, the technology companies which is working on the payment space. Second one is the credit tech, which is on the lending side. Third one is called insurance tech, and fourth one is called the wealth tech. So they follow the pattern. So first, in any country, whenever the digital financial infrastructure evolves, first paytech will come first. So first paytech will come, paytech will mature, then credit tech, wealth tech, and insurance tech will come. Now how it is important? Very important is that very clear. In Oman, you can find out which set will come. My view is very clear here, paytech will now prosper for the next 3-4 years. This paytech will actually gain ground big time in Oman. So first we will discuss what are the levels paytech can work. Once paytech gains ground, then they will go to the insurance tech and then go to the wealth tech as well as the credit tech. Now in the case of the paytech, there are different kinds of companies would be there in the paytech. One is called the level 1 paytech companies. If you look at level 1 paytech companies are called mobile financial services. So first, the level 1 paytech company works, which is the mobile financial services. So what will happen? The mobile carriers, through them the financial services would be actually transferred. M-Pesa Kenya, in India it is started with the mobile financial services. There is a big company in Bangladesh called Bikash, which actually transfer the fund to the mobile financial services. So stage 1 is the paytech is the mobile financial services. Now once the mobile financial services gain ground, second category of companies in the paytech which will work on the credit card on debit card sides. That is the credit card on debit card sides. So if you look at the level 2 paytech companies which will be working on credit card, debit card, internet, and also the mobile payment services. Oman, my view is that there is a lot of scopes are there in the case of this kind of companies. This is called the credit card and debit card side of companies. There is a lot of scopes. Now one thing very important you have to understand is that this is the entire structure of a credit card or debit card part. What happens is that first a customer goes to the merchant, swipes the machines, and from the machines the data will flow in to the payment network, there is the issuing bank and merchant bank. Any question, please feel free to ask. There is a red color mark is there. Red color mark means nobody would be allowed to work inside that. So no fintech would be working inside. Nobody. Yeah, nobody will work. Because this is the exclusive privilege of payment companies like Visa, Master, Amex. Only one company tried to break it in US called Plaid. The Plaid tried to break it in US. What has happened? The Visa tried to acquire the Plaid to kill the competitions. However, what has happened, because of certain regulatory pressure, they stopped that part. So one of the very important, the paytech companies, which is working not here, it is working outside. So all the paytech companies, if you see, they would be working areas, this areas that is called the tokenization, mobile hardware based securities, and also in the processing side merchant. So Oman, there is a good scope of paytech companies working on the upper sides. Classical example, if you look at Pine Lab. Pine Lab, if you have heard, the Pine Lab is working on the machine sides. Now what will happen? Now these paytech companies will be working with the vendors and they will try to improve the solutions. So this is the stage 2 paytech companies would be there. So stage 2 paytech company grows. What happens when the credit card, debit card penetration happens? Now comes to the stage 3 paytech companies. Now stage 3 paytech companies comes, which is called PSP and PSOs, that is payment service provider and payment service operator. Now can anyone tell me what is the difference between payment service provider and payment service operator? Okay, payment service provider means they will facilitate the payment. Payment service operator means the system through which payment happens. Examples, Razor Pay is a payment service provider. NPCI is a payment service operator. Visa is a payment service operator. So payment service provider means which helps the payment through the system. But payment service operator is the entity or through the systems. So which one needs more regulation? PSO or PSPs? So naturally PSO will require more regulations. So when you talk about the third stage of paytech companies, these are mainly PSPs and PSOs. So as more and more digital commerce grows, as more and more e-commerce grows, then PSP and PSO start increasing their scope. So the level 3 paytech companies are the PSP and PSOs. So in the case of the PSP and PSOs, this is called the payment gateway. This is the way it works. So what will happen first is that the customer will go to the e-commerce sites, then e-commerce site will link with PSO, PSPs, and PSO will connect to the user's credit card or debit card through multiple channels. There is a payment gateway 1, payment gateway 2, net banking and UPI. E-commerce site can also directly get connected with this. Now let us try to understand what is happening. First of all, if I want to increase my sales, I have to go by e-commerce. Very clear, if the e-commerce is not happening, I cannot increase my sales. If there is e-commerce, options are there. I individually link with so many players, which is very difficult for me because it is a technology part. There can be a third party which will do all these services. That is why the PSP etc. came. Today Razor Pay, correct? Razor Pay is the leading PSP in India. Similarly, if you look at Easy Pay, PayU, all this business has started because of e-commerce growing. You have to see very important point is that one of the most powerful invention of the modern times is the Android phone. Because the moment Android phone has happened, it has game change. Similarly, social media, this is one of the most dramatic changes event has happened. And what has happened is that because of the Android phone, because of the social media, e-commerce has boomed. The moment e-commerce has boomed, automatically what has happened? These companies have started. Now e-commerce, if you look at it, is it favorable to the large companies or small companies? Look at in the e-commerce side, correct? In e-commerce side, if you look at in India or anywhere, the large players are dominating or small players are dominating? No, if you see in India, who are the largest e-commerce portal? Amazon and Flipkart, correct? More by every in the globe, what will happen is that 2 or 3 players are. Now, the moment these two become a large players, what will happen? Small players will be fleeced or not? Now, small players will be fleeced, but can small players say that I will not be in e-commerce? Cannot, because sale has to take place. It is the consumer preferences, correct? I will, more and more younger generation will go for what? More and more younger generation will go for the digital transactions. But small players are getting fleeced. Why? Because the large players are dominating. India has got completely off-guarded on this. Why? Because India could not anticipate these things can happen. In 2020, COVID came. The moment COVID came, the people have shifted to the online. The moment people have shifted to the online, 2020, the government has found out something has gone wrong. Because what? They have done the digital UPI, etc. But they actually got it off guarded on the e-commerce side. So 2020, they realized some major mistake has happened. What has happened? Now the small players are at the mercy of Amazon, Flipkart, etc. Immediately they found something. Can anyone tell me what is it? Immediately formed, which is first time in the world, which is called ONDC, Open Network for Digital Commerce. The Open Network for Digital Commerce, they formed in May 2021. By May 2022, ONDC is now live. So what has happened? Again, what has happened is that e-commerce is going forward. But e-commerce going forward, what is happening there is large players are concentrating. So that the small players are getting fleeced. The moment small players are getting fleeced, to avoid that, something called Open Network Digital Commerce has been created in India. And this is nowhere in the world this is there. Again the same story. Why? Because the democratization of the entire digital infrastructure happens. So this is very important, we have to keep it in mind that PSO and PSPs have started because of Android phone, because of the social media and because of digital penetrations. So these are the important points. Now what is happening right now? Why financial institutions are at backwards? Many traditional bankers, many traditional banks are not marketing for their current account e-commerce solutions. What is happening is they are still going and saying that I will collect cash by the month end, I will give you the check facilities. But this is not the case. What you have to do is that if the customer has to work or customer has to grow, you have to provide them the e-commerce solutions like payment gateway solutions. So this shift is required in the case of the financial institutions because these changes happened. And this is one of the very important points you have to keep it in mind. Here also in Oman, the level 3 paytech companies will grow. Why? Because here the more and more digital part would be there. So more and more this payment gateway, more and more these companies will come. Now anyone is having any question, please feel free to ask. Yeah, please. Open ONDC. What I will do is that I will just simple here because I keep coming on Oman. Next I will tell the institute to organize, I will come. Just I will give you in brief. Today what is happening, if I sell in Amazon, then suddenly I am not very comfortable with Amazon. I am selling with Amazon for 3 years, I am not comfortable with Amazon today. I go to Flipkart, but all my history of last 3 years is gone. Because Amazon will not give the history to the Flipkart. Now ONDC is creating something where, suppose I do it Amazon, Amazon is a member of ONDC. Now what will happen, if I shift from Amazon to others, Amazon is bound to transfer my history to the new platform. So what is happening is it's not a platform specific, it's a platform agnostic. So this is one of the features. There are other features are there. So and small people, small vendors can actually get onboarded. How? Suppose I have a catalog. Now this catalog I can get it done from a very small software companies upload it through a protocol, automatically convert it into the digital catalog and upload it in the ONDC framework. So, those things, certain features are there, and that will help the small people to go into the system. Now, the creation of this big thing is like requires a huge amount of money that is being created as a non-profit entity. So, ONDC has been created as a non-profit entity where they are creating these technology sites. So, when you talk about the India stack, now a later part of the presentation is an India stack. There we will see the philosophy of India stack, how India stack is operating on these sites. Now, I will tell also this. So, when I come next, you can actually give a sessions on the ONDC side also. Now, if you see in the case of the online credit card part, there are a couple of work done by, you see, where the paytech company can work. Now, in this entire front, each players are working in separate activity. One of the very important point in credit card is called the fraud checks. So, a lot of paytech companies are working on the fraud check sites. You see, when you do a transactions, suddenly you do a transaction higher amount, immediately call come from call centers, is it not? What they happen? One of the very important techniques is called IMI number, IP addresses and average transactions. So, there is an algorithm is there, because when I do any transactions for mobile, each mobile has an IMI unique number. For the case of the laptop, it is MAC. Then I have an IP address, I use a certain IP addresses, and there is a combinations of, there is an amount transactions. So, algorithm says that if suddenly some higher transaction is happening, where any 3 or some complicated things are happening, immediately they verify that whether you have done the transaction or not. So, this is called fraud prevention, some of the things. Yes, please. Hey, Mike, yeah.
Yes, sir. So, what I am asking that sometimes when we are doing the transaction through credit card, sometimes OTP is coming, sometimes OTP is not coming. So, what is the reason behind that?
No.
Whenever we are doing transaction through debit cards, all the times OTP will be coming, but that is not in the case of credit card.
No, generally what will happen is that two-factor, in certain countries, there will be two-factor authentications. Okay. And when the system gets matured, they will tell a particular amount of transactions, there will be one-factor authentications can be there. So, above a certain limit, there can be an OTP thing coming. So, it depends on the regulators, correct? So, that means what is the regulatory guideline? Two-factor authentications would be there. One is your password, next is the OTP. Now, it also, the moment number of authentication goes up, it is inconvenience. So, what the people will do? First, they will create a robust system, two-factor authentication would be there. Now, what they will say? No, now we will have to relax it. So, what they will do? They will say that, okay, up to a particular transactions, you do not require it, correct? So, that is the reason for this would be there.
Okay,
clear?
thank you. Thank you.
Okay. Now, now, what we say, if you see in any transactions, you do a password, correct? But maybe certain banks have said for the first transaction, I will not only do through password, but I will also do the grid on the reverse of the side, because first transaction is happening. So, there is some kind of checks are there. Then they will say, okay, no, after certain transactions, we will actually relax it. So, that is the reason where there will be something it will be coming or not. So, one of the areas where paytech can work is a fraud analytics. That means they can use the fraud part. Similarly, paytech can work where the reducing the latencies, that means how fast the transaction will happen. Example I will tell you, yesterday I tried to book a ticket through Indigo website. What has happened? My transaction did not go through. Bank account debited. First of all, credit card did not go through. Then what is happening? Bank account is debited, but amount has not been credited. Now, from India I got it booked. It is a terrific amount of inconvenience. It gives us some complete negative image that I will never go to the Indigo website to book the tickets. Now, what is happening? Because the payment service provider is not good. PayU was the payment service provider. You are telling my point? Now, what is happening is that the moment I see PayU is a payment service provider, I will now check which sites are having PayU as a payment service provider. I will get immediately scared. So, this is very important, we have to keep it in mind. Now, here the people can work to improve the success rate. Now, in this case Razorpay, they charges higher amount, but absolutely superb is the payment process. Razorpay came later than the PayU and others. So, one of the very important point, the paytech companies work to facilitate the transaction, fraud analytics and all these sites. Now, one of the very important point why, if you see, why ChatGPT Google is worried. Can anyone tell me? ChatGPT Google is worried. The Sundar Pichai has said code red for the case of the Google. You see, before Google came, who was the largest search engine provider? Yahoo. Generally, this is one-way traffic. When it goes, it will not come back. So, if traffic goes from here, it will not come back. In the digital space, experience plays a very important role. If I have got a bad experience, I will never go to that. So, what Google is actually thinking, their major benefit is the search engine. The entire advertisement comes because of the search engine. Now, if the search site code GPT actually ChatGPT actually picks it up, it can be one-way traffic. So, that's the concern. Especially in these cases also, if the pay takes are not giving the customer experiences, people will never come back. So, that is one of the areas where Paytech works, is that small companies works for excellent amount of customer interferences. So, that is an customer satisfaction part is there. Now, then we talk about the level 3 Paytech firms. You see, it starts with the social medium, hook the people, and then go to the financial services. This model we have seen only Western market, like US market. In US market, we have seen something called Venmo, which started with the social media, and then they started going into the financial services. So, this is typical to the US market we have seen, but for other market we have not seen it is evolving, but it does not mean it may not evolve, correct? It can evolve, but right now this is trend is restricted only towards the US market, it is there. This is basically the Venmo part. Now, level 3 Paytech firms where Oman QR code pick up big time, high chances are there. In Oman, QR code picking up big time can be there. So, one of the very important points, the level 3 Paytech firms are working on contactless payment, iris based payment and QR code. Out of these, first two is very, very important because first two can actually pick it up very fast. That is the contactless payment is already there and also QR codes. So, if you look at it, here a lot of digital penetration happens through QR code, can happen, because QR code is easy and already the government has come out with some kind of circulars where QR code through payment based system has to be there. Second part is that once more and more things are happening through QR code, more formalization of the economy happens. More formalization of the economy happens means more organization, institutional funding would be there. So, the more and more these transactions happens, the more scope of funding happens, more of formalizations part is happening. So, here level 3 Paytech firms, lot of companies can work on the QR code sites where the payment can be facilitated, correct. So, here is a level 3 firms, but iris based payment generally we have not seen much increasing part. So, it is more of now very few people are happening on the iris side payment actually. So, if you look at it, level 3 firms, QR code, contactless payment, definitely people can work on these sides. Now, you see, I will slightly deviate. You see, macroeconomic concept is very, very important. Before the break, we are discussing with some of our members about the inflation part. Look at it, what has happened. Paytech companies has been growing exponentially for the last 6-7 years, correct? What is the reason behind it? One, we have seen there was a problem of the demand side, supply side. Another was the macroeconomic situations. What is the macroeconomic situations? It started from 2008 and 9. 2008 and 9, what has happened? Subprime crisis came. When subprime crisis came, to overcome the subprime crisis, what has happened? Monetary easing has happened, financial, the fiscal side is also there. That means government has pumped money, the central bank has pumped money. Their aim was to increase the inflation, but it did not happen. So, it continued to do that, that means they wanted to increase the inflation, it never happened. So, what has happened? They pumped in more and more money. So, when there was no return was not available. So, what is happening? People started chasing risky assets. Now, should insurance company, should pension fund, should invest in venture capital? What is the logic says? Should not. But by 2019, around 15% of the pension funds and insurance companies money went to venture capital. Because logic was there, since almost across the globe no yield is there. So, you have to go somewhere where some yield is there. An exit was happening, then came COVID. In COVID, what has happened? Already market is flushed with liquidity. 2 round of another huge injection of liquidity has gone. One is the stimulus, one is the monetary policy. So, what has happened? Previously already it was high, now further more money has gone in the system. Now, inflation started opening up. The moment inflation started opening it up, automatically what has happened? The interest rate has to go up, money has become scarce. The moment money has become scarce, this loss making business model has vanished. So, startup funding etc. got completely stopped. Reason being is very simple, because the startup loss making businesses all because of started 2008 and 9 continuously grown, because market was there, a lot of money flowed in. The moment it got reversed, this entire business model is gone. Paytech companies are loss making across the world. Every paytech company would be loss making. So, the moment money got tightened, what has happened? They have to make profit making. I think all of you are following the Paytm story in India. Now, they are telling profits, correct? Around 2 years back, they are never talking about profits. Because of this, macroeconomic situation has changed. So, Paytech company, they have to turn profitable earlier than previous projections. So, when any fintech has to make profit, they have to go to lending. So, what is happening? Next round of fintech would be the credit tech. You getting my point? So, always there is a movement from paytech to credit tech would have been there. However, this macroeconomic situation changes has prompted this acceleration faster, that has resulted in more faster towards credit tech companies. So, credit tech companies is the things what it will happen here. Now, in Oman, my view is that credit tech company has got another 4-5 years time to mature here, because here paytech will mature first. It will be next 2 years, 2.5 years, paytech will mature. Then the credit tech will come. India, we are at the inflection point of credit tech to explode. In the next 3 years, credit tech will explode in India. It's simply explosion will happen in credit tech in India, because already paytech has been established. Now, paytech needs to be profitable because of the macroeconomic situation changes. So, credit tech would be there. Now, in the case of the credit tech, very important is that what happens? The e-commerce people, that means these are the data. You see, paytech companies are processing data. Shopkeepers are also getting more QR code, more credit card, more UPI. It means more formalizations, more data comes in. Now, one side customers' data, another side is the shopkeepers' data. Then they have got lot of financial data coming in. So, these are the transaction data, behavioral data. If financial data comes in, huge amount of data is there. Now, it all going to data science. So, if you have got huge amount of data, now data science will take care and give very accurate predictions. So, first paytech will evolve where there will be a lot of data will be processed. Next one is that the transaction data would be there, and then financial data if it is possible to get the financial data, then we can create a very robust model or robust scenarios where very high degree of accuracy we can say which borrower is riskier, which borrower is not riskier. So, that is where the credit tech company grows. So, what will happen? Now, with the help of the data, AI, artificial intelligence and machine learning based algorithms, what it will do? It will lead to the retail lending and MSME lending. So, 5 years from now in Oman, we are very sure the major part of the retail lending and MSME lending will go towards credit tech kind of sides. Because why it makes logical sense? Because faster decisions, more accurate decisions is possible through this, and this is the going progressions. So, here financial institutions will have to collaborate with the fintech, or they have to adapt to these changes to gain the to retain in the market share. This is must, because everywhere in the world this direction it will happen. Now, if people are not doing it, definitely they will miss the bus. So, this is very important for the great tech companies would be there. Let us look at it how the global evolution has happened. One of the way, you see, if you see when you talk about the fintech sites, two countries to watch for. What are the two countries? India and China. These are two countries to watch for in the fintech adoptions. Now, if you see in China how it is evolved by first Alibaba e-commerce, then Paytech, Alipay, and then Ant Financials. So, first e-commerce, then payment, then Ant Financials. In the US, Venmo social media, then payment. Now, if you look at it in Indian scenario, Paytm first come with wallet, then Credit Tech, Wealth Tech, they came up with an e-commerce, and then they come up with a payment banks. So, in India, if you look at it, the Paytm started with a wallet, then they come out with a mall e-commerce, but that failed actually, and in the other side it has come. But in India, e-commerce to payment, like China, which company? Flipkart. Because pay, what is that? In the case of the Flipkart is basically were two leading UPI provider. What is the two leading UPI provider? GPay and PhonePe. So, PhonePe is a Flipkart subsidiary, correct? So, what has happened in India? E-commerce, Paytech. E-commerce and Paytech would be there in the case of the India. Now, can anyone tell me which is the most formidable player in the digital financial infrastructure in India? The most formidable player, Reliance. You will see how they have created the infrastructure. First telecom, next retail, next e-commerce, next digital wallet, payment bank, Kirana linkage, Reliance NBFC, that is Reliance Jio Finance, they are listing it, and they had an account aggregator license that is going out. So, what has happened here is that the most formidable player in Indian market in financial infrastructure is going to be Reliance. So, what has happened? They have created this. Now, one of the very important points, you have to keep it in mind, the Reliance Jio Finance, they are now making it listing. Now, they have created all the infrastructures, and it has got the disruption potential how the Reliance Jio has done for the mobiles. So, what has happened here is that, so you create an infrastructure where you have actually created the entire ecosystem. Now, you will be using the ecosystem for the case of the lending sides or financial part side. So, if you see how the things are evolved, so in Oman also we will see definitely some of the large players would be creating this kind of ecosystem, because financial service sector definitely is a major role to play, and it can be some large players, it can be financial service sector, vice versa, or some other players can come in, collaborate with the financial service sector, and then create the ecosystem. So, this is one of the important, you see the evolutions which is happening. Now, if you look at the Ant Financials, now up to what time we are having it? 8:30, no? So, I have got 15 minutes, okay. Now, in the case of the Ant Financials, if you look at it, this is how they have actually started in the Ant Financials. First, they started with the payment, the website payment, that is for the e-commerce facilitation. Next, apps payment, for the payment apps. Next, if you look at QR code, next, what is happening, very important, this product if you look at it, that is the Taobao is mainly the shipping return insurance. What they are doing? Main businesses, they are supporting to the financial products. A very unique trend is happening. Main businesses is being supported by the financial products. Previously, financial services were providing it. Now, a main company is providing financial services product for supporting it. So, this is very, very important. We have to see this is a distinct trend has started, and this is not now, this is in 2010 it has started. Next, if you look at it, UBOW is 2013 it started. What they are doing, suppose I am a balance of say 1000 Omani Riyal, I have a balance in 1000 Omani Riyal. Lot of data of mine is being processed. From that, the prediction is happening. What is the probability this 1000 Omani Riyal would be there for the entire day, which can calculate with very high degree of accuracy. Now, what they are doing, they are saying that you can use 1000 Romani Riyal, but at the same time you will earn. So, what is happening? Because of the uses of the data, there is a probability of 99% that my 1000 Omani Riyal would always be there. So, based on that they started giving the daily return. This was not possible if the data was not there, if the behavior was not there. So, that is called the daily return scheme has started in the case of this part. So, when you pool large number of smaller amount, chances of large amount goes down substantially. So, that is called the daily return product. Next, they started with digitally unsecured lending, UOBI in 2014. You give a small amount of lending, unsecured lending, and a small amount you started giving. So, first people start with the small amount giving. Now, once you start giving small amount giving, you get the history, then started with the larger amount. So, if you see first payment, then some wealth tech, then credit tech, and then you talk about the other part. So, this is the trend what we have seen in the case of and financials. So, I will quickly go through the India stack, which is everybody should know, because we have limited times. Look at it, something called India stack. You see, you hear a lot of work about India stack. Now, any countries, if you look at, the stack would be at 4 levels. One is telecommunication and computational technology on the hardware side. So, if the cost of hardware is high, digital adoption would be lower. So, you have to bring down the cost of the hardware. Generally, what has happened, smartphone, tablet, PCs, this has to be actually cost will go down. What is happening? Because of the scale or large amount, what is happening? This is actually cost is coming down. Second part, internet. In the internet, what happens? If internet is prohibitive, what will lead to? It will lead to, internet is prohibitive, what is lead to? It will lead to less digital adoptions. So, internet cost will come down. The most important part is the large scale infrastructure platform. First, you need a hardware. Second, you need the internet affordability. Next part comes the core part of the system we will develop. Here, two trends globally is happening. One trend, private players are developing it. Now, for example, Apple Pay. In another trend, which is India is following, it is a public goods. That means, all this, the main infrastructure, this should be done on a non-profit entity. So, one of the unique features of the India stack is that create core part of the infrastructure as a non-profit entity and make the API open. Once you make the API open, the large numbers of players can come in. So, India stack use the most unique features is that create this one as a public goods, make the API open, and on that company should innovate. So, what is happening right now? The India has created largest infrastructure, digital financial infrastructure in the world as a public goods. So, when you talk about India stack, we talk about this part we talk about India stack. And believe me, you must see the videos of India stack. If you are in finance domain, you have to understand what is happening. It's an unprecedented things are happening as an India stack, because nowhere people can think this is possible. 8 crores UA bill has been generating monthly, flawlessly. UPI transactions, billion dollars transactions are happening just flawlessly. So it is basically what has happened, it has been created as a public goods. Now they are making it open. G20 right now is going on or not? Oman is one of the invitation countries in G20. Because what has happened, apart from the 20 countries, they have invited certain people. UPI is coming to Oman. UPI will come to Oman. Just Singapore, Dubai, it is there, now it is coming to Oman. UPI is going to 28 countries in the world where this India stack has been actually being done. So when you talk about India stack, you see how the development take place. First, we have an identity rail. That means you have to first take an identity part to start an financial inclusion. So that's an Aadhaar, digital signature happens. Second part came UPI. So what has happened in UPI? Core system has been created and keep the API open. So previously, if there is no UPI, suppose I am an e-commerce company, if there is no UPI, there are 30 banks. Each bank I have to do the payment gateway. Now what I am doing? UPI common, keep the API open, so people can plug in. So this part has been done by the NPCI. So one of the very important point, what they have done is called the payment rail. What has happened? First is the identity rail, then the payment rail where API came. Why I am telling repeatedly, one of the dangerous problem in the financial service sector is amnesia. People forget. When UPI came, bankers were completely disdainful. They are saying that what UPI, the payment will do. 90% of the retail transaction today originate outside banking system. So 90% of the transaction is happening origin in the banking system. So that means the major problem is that this India stack has been not developed by the finance people. This is being developed by the technology people like Nandan Nilekarni. Since they have developed it, financial service sector is not aware of the potential of it. Now what has happened is that now 2016 UPI came. By 2020, banking is nowhere in the payment system. Bank has moved because 90% is the transaction is happening through these 2-3 platforms. Now next thing what has happened, once EPI came, then came something called account aggregator or the data sharing rail. So when you talk about India stack, there are 3 components: identity rail, payment rail and data sharing rail. Identity rail helped to create largest financial inclusion in the world, Jan Dhan. Next, UPI rail has been created for the social benefit transfer, that is the DBT. Now once these 2 things have been achieved, now it is going to different countries. Data sharing rail, it came in 2020 through account aggregator. Now this is the potential for the case of the lending. So one of the very important points, India stack when you talk about, this is basically 3 layers: identity layer, payment layer and data sharing layer. We have seen identity layer and payment layer, now we will go to the data sharing layer. Now in the case of the account aggregator framework, we will quickly go, then we have a questions. This is an account aggregator framework. There is a concept of banking, is called open banking. The ultimate form of open banking is, I have an account in Bank Muscat. Tomorrow I transfer it to Dhofar Bank, same account number. This is called the ultimate of open banking. So, sorry? Okay. So the same account number will go. Is it same account number going from Bank Muscat to Bank Dhofar? I don't think so. No, it has not come. Because in India also it has not come. It's the same account number. Suppose in mobile. In mobile, when you change the carrier, account number will be same. Complete portability would be there. That's called the ultimate of open banking. But India started something called consent driven open banking. Now, consent driven open banking. So what is happening here is that now already India stack we have an identity layer, payment layer has been established. So people have been identified, account open, transactions happen. Next big thing is the lending, because people don't get fund. Today I had a meeting at 3:30 with the SME foundations. They are the same thing here. SME does not get fund, the funding is a problem. Because in one side what is happening? bank is not willing to lend because riskiness is high. On the other side, SME says that I don't get fund. One of the major reasons is that objective analysis is not happening. So this is because lack of data. Now what has happened, in the case of an account aggregator system, how it works. I go to a bank, or I may not go to a bank. Suppose I run a proprietorship firm or partnership firm. My partnership firm's identity would be there, correct? CR number here. In India, we have a PAN. I have my personal PAN on an Aadhaar. Here also the ID number is there. Through apps, I apply to a bank. So I apply to a bank. The moment it goes to a bank, this is called financial information user. So they will use my informations. Where my informations are lying? Suppose I have got 3 accounts, Bank Dhofar, Bank Muscat, Sohar Bank. I have my transaction is being rotated through the VAT. My transaction is rotated to the income tax. I have some depository accounts, some insurances, etc., is there. So what is happening here is that all this data is immensely powerful to ascertain my riskiness, because whether I will default or not. So what is happening? Now the credit provider will now send an informations to an entity called account aggregator. India it is live. So what will happen? These are the regulated body given by RBI. The 9 people have got a license. Suppose a bank will have a connected with the account aggregator. So they will send a message. This account aggregator will send a message to me saying that, have you applied to share your financial data? I have an option to say yes or no. That's called consent based open banking. If I say no, it will not be shared. The moment I say yes, automatically account aggregator will now trigger these informations to all of the places where my account is. From there, the data will flow in straight to the lender. So what is happening? Already you have got the informations, you have got the all financial informations. Beauty of it is that you can have repeated consent. That means one time as well as repeated consent is cancellations. Suppose I am taking 5-year loan, 5 years down the line, Oman, this system is bound to come. 5-year loan I want to take, I go to Bank Muscat or Dhofar, online apply, they will go to the account aggregator will send me a message, say that since you are applying 5-year loan, 5-year periodic consent you will take, I say yes. Every month all my bank data, all my financial data will be pooled by this Bank Dhofar or the Muscat. Then first they will lend, next every month they will evaluate whether my riskiness is going up or down, and based on that they will give the recommendations. So this was never possible had not been system being there. So this system is live now in India. It started in 2020-21. I almost carry out the training sessions. I am very, very sad to say 90% of the Indian bankers are not aware of what it is. Not aware of what it is. So what will happen? Suddenly it will hit. The moment it will hit, the entire things will move out. One of the very important, it's an epoch moment in India. Because never ever we have this part. Now who is gone into the account aggregator? Now you will be believing I was conducting program for RBI for quite long. From June every month, every week I come to Bombay and I conduct sessions for RBI inspector who go to the bank. Now initial period what is happening, the people are saying that the public sector banks are actually objecting to it, that account aggregator is costly and etc. People are not coming on boarding because they are afraid of competitions. But who is the stakeholder of public sector banks? Major stakeholder? Government. The government finance minister, honorable finance minister has told by 31st of July everybody should be onboarded. Now every public sector bank is onboarded. Everyone is onboarded. You won't believe, one of the largest NBFCs, top strategic teams are not aware of all public sector banks are onboarded. This is on February 1st week, I met them. Because initially it was a report has come They have not onboarded, they are in the nation. Today, there are 215 people are onboarded on the account aggregator framework. So one of the major problem is that if the people are not aware of, so what will happen? Suddenly, it will hit and the entire business can move out just like a payment thing has gone. So in the case of the account aggregator sites, it's a game changing things are happening. And last I will show it to you a very important things what you can get it. This is in actual numbers. I will tell you, then I will take a questions. This is no hypothetical thing, this is actual project numbers. So what is happening here is that, look at it. What is the benefit of machine learning based algorithm in lending? What do we do under the normal cases? What we do? Say for example, what we are happening in the normal cases, what we have, credit underwriter is underwriting, correct? In the normal cases, credit underwriter is underwriting. Suppose we create a model, and with the model, what we try to see, what credit underwriter is doing and what model is doing, whether it is same or not. So what is happening is that in model, the model is identifying the category of borrower into three categories: low, medium, high and very high risk. This is this part, low, medium, very high risk. So what it says, the model is saying something low risk, 95% is the approval rate. So what does it mean? Model is saying low risk, credit underwriter is also saying the low risk. Next, model is saying medium risk, there is a sanction rate is going on. So what does it mean? That the credit underwriter is doing lot of activities, and after that what they are doing, exact replication is happening on the sides. Next, they are rejecting it. Now what is happening here is that this is the overall portfolio of a manual credit underwriting. So that means credit underwriters are underwriting it. Overall portfolio bad rate is 11.11%. This is no hypothetical number, it's a live numbers. Now what is happening? If you use the model and just lend low and medium, no credit underwriter, portfolio bad rate comes 5.60%. It gives a straight lift of 97% of your productivity. Now what it says very clearly, now it is very serious, very clearly, and this model does not factor in account aggregator, it is not factored in. With account aggregator data coming in, we are telling regulator, because we work with also ministries, because we will be starting a project with CGTMSE, NPA can be in history, very categorically it is possible. Because of very simple, with lot of data coming in, with the coming up the kind of capacity of processing data and extracting the meaning, you can easily identify very well in advance which customer is low risk, medium risk and high risk, and accordingly you can lend. So if you look at the digital financial infrastructure, this kind of things was never possible if the data was not there, because data is started flowing in. Now with the data computational capability increasing, so this is the going forward in the financial situations. In India, we are very sure 3 years you will see a complete disruption in lending, completely disruption in lending. Now in Oman, we expect 5 to 6 years, a complete disruption in lending will happen, because here SME, retail, everything will move towards the data driven sides. Now one of the very important points you have to understand, living in denial is a dangerous thing. Because always I always tell, lot of bigger problem is getting solved. So from that matter, lending is not a problem at all. So we are actually entering in a scenario where we can solve this problem once for all. So that's it for the today's sessions. Any question, please feel free to ask.
Mr. Praloy, first of all, thank you for the very intriguing session. I really enjoyed it. And I know that there will be a lot of questions on probability of regulations, and I think you have indicated that Oman is in the pipeline specifically with the platforms there.
Correct.
And my question is, because I do come from an Islamic banking background, and you mentioned the ecosystem. So I agree with you, payment first, then comes credit. But then there is a very interesting model in Islamic finance, which is the risk-sharing model.
Correct.
So when do you think this will be, the maturity date for the market? When you mentioned that some of the pension, funds are investing actually in venture capitalism in
Correct.
2019,
Correct.
this is that there is a paradigm shift in the financial industry. So when do you think at a retail level this will happen?
No, there are two parts to it. If you look at it, if you see in the case of the lending side, whether we tell from Islamic banking side or from other sides, the ultimate solution of NPA is that when customer become efficient. This is the ultimate solution of an NPA. If the customer is not efficient, then solution of NPA is not there. So ultimately we have to move towards where the lending is happening, we have to see that how the customer is getting efficient. In Islamic banking, they don't take interest, correct? So they actually becoming the part of the business. Now, so in the case of the Islamic banking, definitely it will grow. But at the side, even the banks which are charging interest, they have to also move from just getting an interest to make them efficient. There is a bank in Singapore who has already started, it's called UOB. What UOB is doing, UOB is taking interest, but they are not going following the Islamic bank, but they are taking interest. But ultimate aim what they are doing, they are also making the company efficient. The moment you go to the business banking, open current account, take loan, but you also get benefit of security information security implementation, some discounts. They are giving the market access. So definitely Islamic banking would come, definitely it should come, it would come. Yeah.
So first of all, thank you for your informative presentation. Fundamentally, what's your idea about the necessity to realize the DAOs, decentralized autonomous organization, to facilitate these objectives actually?
Yeah.
What's your idea about the DAOs, the necessity of the realization of the DAOs, decentralized autonomous organization?
Central autonomous?
Yes.
CBDC?
No, the DAOs.
What is the doubt?
The new generation of organization based on blockchain, decentralized organization, decentralized institute, and decentralized finance.
Centralized finance?
Decentralized, yes.
Decentralized finance?
Yes, of course.
Yeah. Decentralized finance, if you look at it, decentralized finance, especially on the trade side, that would be. A lot of activity on the trade side would be there in decentralized finance, where letter of credit transactions actually can reduce substantially. And here, national level platform can happen, as well as global platform can happen. So in the decentralized finance, what we can have, we have a trade side. Main activity would be on the trade side, would be there. Yeah. Other questions? Yes, please.
Thank you, sir, for the nice presentation. Just want to know, when you say like in 3 years, a complete disruption will happen in lending in India. So what do we mean? The way we do the due diligence of lending will change, or the players will also change? For example, it will move from banks to other players. So what does it mean really?
My view is that I am strongly of the opinion the player will change. Why player will change? First of all, if you look at the growth, nowhere in the world history the faster growth has happened without credit to GDP ratio increasing. If you look at it, South Korea, more than 150%. China, more than 120%. Vietnam, 100%. So nowhere in the world history, growth has happened without credit going up. India is hovering around 52%. So if India has to grow fast, no other alternative but to increase the credit part. Now, existing player may not be nimble enough to change this mode. Since existing player is not nimble enough to change this mode, so my personal view is that a new set of players can emerge. Not fintech, maybe NBFCs, maybe new banks, possible, but existing players will not be.
But that's a kind of big shift of regulation.
Regulation, what you see, very important. In RBI, when I conduct workshops, I have been telling in RBI people, you have to also change the mindset. Because regulator cannot have the mindset where economy is 3 trillion. When economy has to be 5 trillion or 10 trillion, regulator mindset has to also change. So one of the things we have to keep it in mind, Faster credit growth does not mean an NPA, because previously data is not available, now data is available. So, I was telling that in January, the Parliament Standing Committee, Jayant Sinha, has categorically mentioned now we have to reform the two regulators, SEBI and RBI. Definitely regulators also have to be reformed. What we are saying is that resilience has to be system, but not necessarily everything is bad. No, not it is. So, definitely regulatory framework will also change. Now, the situation is such that there can be slippage, but the slippage will be very costly. So, what we have to do? We have to have the guardrails. Now, guardrails is easy to possible to do because this infrastructure is created. Now, with the data driven decision would be there. So, my view is that the player will change, because existing player if to change, we do not have the time actually, we do not have the time. Existing player changes happen very slowly, we do not have the time. So, the player will change, but at the same time prudential part will also be increased, that is some casualty does not happen.
Sir, now we know that RBI has allowed 28 countries to use the UPI, and Oman is also allowed to use the UPI, etc. Normally, UPI in India is used to make third-party payments, not bank-to-bank fund transfers are not done in the same person's account. It is like to a third-party vendor I am transferring. Now, the point which you made also that the banks will lose because they are charging a lot of fees. Now, from Oman, if I want to make the transfer in my own bank account, how UPI will help?
Okay, Oman and India get into the UPI framework. Now, with a mobile app, suppose you have an account with Bank Dhofar. With a mobile app Bank Dhofar, you just transfer your fund, it will hit your India account. So, that means you need not to go to the bank or anything. Because right now what is happening, you go to the bank, it will go to the correspondent bank, then SWIFT, then you go to the Indian correspondent banks, and then it will get created. It will not. There would be a direct breach between the Oman Central Bank and Indian Central Bank. Here some payment would be there, and there is when UPI, there would be the handshaking. So, from you it will strictly go. The question is that initially third party may not be allowed, from your account to somebody else's account would be there, but gradually it will actually go to the third party. And second important point, the moment it goes to that, the fees will substantially come down, because the correspondent banking will not be there. So, what will happen in future, high street people will also come in the payment network. You see, right now initially it studied the bank, when the system stabilizes, so money changes, through money changes you will shift the money to the India through UPI and these things, but it will be gradually. But generally what happens is that since India has been achieved in a larger scale, here very fast it can be implemented, So, that is the way it would be there. But initially now Singapore they have done it is only $100,000, 1,000 Sing dollars, and by that way it has started, but in another 6-7 months time everybody would be able to do that. No, the very important point, they have to be always aware what is happening, and based on that they have to change their strategies. And one of the very important points, we should, not only banks, every one of us should have an open mind at how the things are changing. Because one of the problems of the bank is a regulated industry, so competition is less. This makes them complacent. So, they have to constantly think what is happening, because otherwise what will happen, then if they do not think, then they will be upset. So, only way to do it is that change how the things are moving and etc. That is definitely is required. And believe me, we are actually entering in an era which is unprecedented. The change is happening, unprecedented. It is just not, because unless we are up to date, it is absolutely impossible, because what is happening is terrific amount of changes happening. As we speak, there is a concern about new pandemic. So, what is happening in new pandemic, H1N1? What is happening? You see, last week the bird flu has transmitted from bird to human being. So, World WHO is closely monitoring. So, if it actually transmits to human being, there can be another dangerous things. So, it is very important to make ourselves aware what is happening. Now, people last week itself, and the mortality rate is 50%. Now, you see today we are concerned because we have seen COVID, same H1N1 has happened in 2008-9, nobody was concerned. So, the things have been changing dramatically because every day something is happening. So, we have to keep ourselves updated because otherwise there is a very difficult, very almost impossible to what is happening actually.
Thank you, Praloy, for enlightening our members on this very interesting
Thank you so
topic.
much.
We have a lot of many questions, but because of paucity of time, we'll keep your next session sometime,
Sure.
so we'll have many other questions.
Sure.
May I request Dr. Fatim to be on stage to felicitate Mr. Praloy?
Thank you so much. And here, I am here because of her, because I went to meet her in Bangalore, then she immediately told, you must be in touch with ICI chapter, and that's why I am here. Thank you so much.
Honorary CA. So whenever I see someone with such information, I have to make them listen to CA. So I owe to the members in the chapter, and I think that more to come, inshallah. As Ms. Sangeeta mentioned, there are more very wonderful events coming. So I look forward to meet you all, inshallah.
Thank you.
Thanks for suggesting, and it was a very nice lecture. Thanks for the recommendation.
Thank you so much.
May I request Vice Chairman CA Jim for a formal vote of thanks?
Thank you, Ashji. To be frank, I was expecting a usual presentation from a consultant, but what we experienced is a very passionate lecture from a professor. So thank you very much, sir. You got a lot of ideas, lot of revolutionary things happening in the background. As chartered accountants, we will take some time to digest all these things. I hope you will share the presentation.
Sure,
it will be
absolutely
beneficial to all the members. Thank you very much, sir. We are expecting more support from your side also. Thanks to all for joining today. Thanks to CBFS. Dr. Fatin, thank you very much for introducing. So you can continue this support. We are formally inviting you for our International Women's Day event, which is coming up on 8th. So thank you very much. So thanks to all for joining today.